It's Ben from UPW Capital. I will be giving you support in this tutorial. Please note that everything provided is strictly for educational purposes only. Show us some love and share this video or information with friends and family. Also, we would appreciate if you could please subscribe to our YouTube channel. Let us look at a setup called the Breakout Trade. This video will be about 12 minutes long, so please make notes and watch the video a few times. We have EUR/USD or Eurodollar. This is the daily chart. As you can see, we reached a significant resistance level or area around December 2020. Price pushed lower and we continue to move lower. It is very important to study price and its structure. We use price to get clues in terms of direction. On the longer-term time frame, we also know that EUR/USD or Euro/USD is moving lower. It would make sense to favor the downside. Favor the downside means we could look for sell opportunities. As you can see, I have also used a 50-period exponential moving average, EMA. Price tends to stay below the EMA. The EMA is a free tool on MetaTrader 4 which is used as a guide. We could also say it is a summary of price. Price tends to touch the EMA a few times and then moves lower. We could also say there could be a better sell entry closer to the EMA. The EMA is the light red line in case you never figure it out as yet. We will now zoom in slightly and look at price closer in order to make decisions. We will also examine price step by step. In the highlighted area we have a lot of ranging or congestion. It is also known as a consolidation or indecision area. We now see that price has broken out or above the ranging area. The candlestick which breakouts from the tight range and moves away from the EMA now has my attention. Also remember, nothing is guaranteed in trading. Typically the Forex market does as it pleases. Unfortunately, we can never dictate or control it. We will now look at the other candlesticks for more clues. Price has now moved a considerable space from the EMA. I will now look at support and resistance levels. Think of support as levels or areas where buyers come into the market. Resistance can be a place or area where sellers come into the market. We normally use these trading concepts to plan our entry into the trade. When you study your price charts, please look at old support and resistance levels. They always repeat or appear over and over again. They are more significant on the higher time frames. Generally speaking, old support levels may get converted into resistance levels. We can also say that old resistance levels may get converted into support levels. You will notice that I refer to either price levels or areas. From my side, they are generally considered the same thing. The main reason is that price is matched by orders being filled. At each price level we may have either buyers or sellers. For example, between 1.2500 and 1.2510 we could have a majority of sellers who could drive price lower. Price may rotate and move lower anywhere between the previous mentioned levels. If you want an entire video with a full explanation, then please let me know. For now it is not so important. I placed a horizontal line and ideally I would like to see price move up into the level or area. That is definitely an area of value and there is an expectation that we may get a signal to sell. You may have noticed an engulfing bar or candlestick on our charts. It is a red candlestick which is larger than the previous or smaller blue candlestick. See if you can spot it? Generally that type of candlestick provides as great signal to sell. Please remember that I am not implying that any and every engulfing bar is a sell. We need to test every technique before using it on the live markets. Otherwise it is equivalent to gambling or taking a chance. I also have your back with respect to testing a strategy. My YouTube video will guide you with benefits, processes and give you a full version strategy tester. If you have the Forex strategy tester, guess what? You do not need to buy signals, mentorship and anything else. You can easily develop anything yourself over time. Ideally, I would have loved if the engulfing bar formed at the area of value that was identified. This would have been a trade that I would have taken. I trade with a set of rules or according to a trading plan. A trading plan allows me to be consistent and follow a process. Let us see if price can move higher by any chance. We will look at price step by step. There are two large sell candlesticks shown. Price looks like it will move lower. I believe it is very important to have dual plans in the Forex market. It is almost like saying if plan A fails, then what is plan B? Always properly test any technique or strategy so that you know how it performs. You never need to buy a strategy, as it is just a tiny part of Forex trading and its challenges. Now my thinking is as follows. If price can close below the structure indicated or shown, then I will look at a breakout trade. Now we will continue to look at each bar or candlestick so we can make a decision. If you are wondering what type of trading or technique we are using, we can call it price action trading. I only trade price action or use technical analysis for now. We can see more red candlesticks or sell candles. We are slowly getting closer or could end up closing lower than the level or area we mentioned before. Generally, the breakout trade gives us the clue that price may continue lower. It is almost like saying the algorithms want to drive price lower. We have finally closed lower and will follow the trading plan. We now have a breakout candlestick or bar as shown. The breakout bar will now form our entry trigger or signal. We are selling or shorting as shown. As we go through this trade setup, which is very in-depth, this would form a basic trading strategy or a plan of attack on the Forex markets. As you can see, I did not ask for a fee or charge for the strategy. Your job going forward is to extensively test the strategy and see if it works for you. Always build yourself or your technique on a demo account. Never rush to trade live, as the market has algorithms which are designed to take money from us, not forgetting the highly specialized traders. Try it on different instruments, pairs, etc. We also need to work massively on our psychology, as losing is inevitable and can be very challenging. I will execute the sell order and will also show you how to set up the stop loss. There is an idea that can be adopted in Forex trading which states that taking consistent action leads to consistent results. What this means is that if you consistently do something every day or every time, not only will you become a master, but you will get consistent results. Obviously, as you grow, the results will be better, but if we know our performance and numbers, then we have a lot of power. The power lies in knowing our results for the particular strategy and how it performs in different market conditions. This is your child or baby, and you must know it in and out to thrive. There are no shortcuts to success. Just as I cannot use your shoe which allowed you to sprint and win the race, thus we can also say that you can never use someone else's strategy. If it was that easy, we would have millions of Forex billionaires, as the Forex market is trading around 5 trillion USD a day. For the stop loss, I will use the average true range (ATR) indicator as a tool. This tool measures the volatility in the market. The ATR is a free tool found under Indicators on your MetaTrader 4 platform. If we read our ATR tool, we read it as roughly 70 pips. 1 ATR as the stop loss simply means the stop loss will be set 70 pips from the high of the breakout bar. There is no magic to this stop loss technique, and it can be tested and used as per your needs. You can use this as a base or example and explore to get the best results for you. For example, you could decide to use 0.8 times the ATR value. You could also decide to test 1.5 times the ATR value. The ATR is just one example for setting a stop loss, and there can be many other techniques which can be used. For example, you can use a trend line, moving average, etc. Always be consistent with your own trading plan. It will really help build your trading confidence. You probably do not know this, but many gurus or mentors do not manage their risk properly and regularly mislead people. It's extremely important to use a stop loss. If you are asking why should I use a stop loss? Well, let me tell you why. The market is the boss. Neither your mentor or even myself can tell you that the market is guaranteed to go in any particular direction. If you ever have anyone guaranteeing you anything, please run away. Yes, I plead with you to run away. The market can drop lower or even go higher at any time. There are high risks involved with any sort of trading. You protect your Forex account or your money by using a stop-loss. It is also called risk management. We must protect our capital at all times, and the nature of this business entails losses. In the back of our mind, we must also prepare mentally and understand that the trade may not work out. As mentioned before, this is part of the process. We learn from our failures, and we know that we can never win 100% of the time. Failure is definitely painful, and we must prepare even more. This is the greatest learning opportunity. I have also noticed from many of the aggressive marketing that we have been given or shown massive misleading information. There is a constant display of profits, Lamborghini, Forex trading success stories, etc. You may feel bad and think something is wrong with you or your strategy. You may even believe that you are a failure and not going to make it. Well, let me say this. Those so-called Forex millionaires make most of their money from other sources. Most of them are fake and cannot trade. Yes, I kid you not. Make sure you follow your own path and give yourself enough time. Social media, TV, newspapers, etc. are most of the time using hype to drive their businesses. Yep, they all make money from news, gossip, lies, etc. We will study the bars or candlesticks further and see how things go. Price seems to be pushing up or going higher. We are following our plan, and that is great and very important. Learning the process is the most important goal. Unfortunately, our stop-loss gets hit or we are taken out of the trade. This is unpleasant and not a nice feeling. We will record this trade in our Excel sheet and continue to train, simulate, and never give up. I hope the video was helpful. We have come to the end of our tutorial or training. Please do not forget to subscribe to our YouTube channel. We can only serve you and more people with your support. You can also find us on our Facebook page at UPW Capital. We have also started a new blog on www.upwcapital.com. Please check our new blog.